Good morning, everyone. Happy Monday to you all. Today, we're going to talk about put options. Now, I must admit that I am around a month or two late in giving you guys the information about put options. I try to really take my time on options because initially getting into option trading can be somewhat very, very difficult for some people. Just understanding the timeline, because options in general, whether options are long-term or short-term, it's not one of those things you can just go in willy-nilly, invest inside the option and just let it go. You have to watch these options each and every day. That way you can exercise those options or keep those options in order to make profit your ROI. These things are very important. So what we're going to do is we're going to quickly break down put options and why I think that you guys should be investing in put options only at this current place in time. As usual, we're going to give you the so-called book answer here. It says here from Investopedia that a put option is a contract giving the option buyer the right, but not the obligation to sell or sell short a specified amount of underlying. And then I highlighted this portion down here. I'm gonna read this in totality. It says, in finance, a put or put option is a financial market derivative instrument that gives the holder the right to sell an asset at a specified price by a specified date to the right of the put. A lot of this is just jargon, right? People who are not really into investing, who are new to investing, like, what does all that mean? And I'm gonna break it down. The purchase of a put option is interpreted as a negative sentiment about the future value of underlying stock. So basically, when we're talking about stocks, we'll go over here. I'm gonna show you some, these are call options right here. So the major difference between a call option and a put option is that when you do a call option, you are investing that a particular stock price will increase in price, not decrease. And that's the very opposite. So the put option is you're investing inside of a stock, banking on the fact that it will decrease in price, meaning that the stock is losing value, meaning that the stock is losing money, okay? So just like anything else, let's take, for instance, let me just glance through my portfolio. And the reason behind this particular video today, ladies and gentlemen, is that for the past month or two, I've been looking at my portfolio, all of my stocks, all of my call options, and they have been doing horribly bad. A lot of them have been EOM, expiring out of the money, and I've been losing hundreds, if not thousands of dollars, because the stock market is in its own recession, okay? It's in its own recession. Now, as I'm looking at some of these stocks, if you notice, a lot of these stocks are in red and very few of them are doing well at all. So I'm really trying to find me a stock that's kind of low in price that I can pretty much just jump in. Now, let me look at LX very quick. Let me see how much this is, a stock price. So we see we have Lex and FinTech. So this is going to be a very cheap option to buy. So the first thing I'm going to do, I'm going to go over here, and this is on Robinhood. It may be similar on other platforms, but I'm just kind of giving it to you off of Robinhood. Now, I may have to put some money inside my buying power, which I only have 64. Now, I'm going to trade options. And from the very top here, you have buy, sell, call, put, and then you have your expiration date. What's important here is I'm going to buy, but now a call option, again, is you banking on the fact that you believe the stock is going to increase in price over a given time versus decrease in price over a given time. So I'm going to put option here. And if you notice, as soon as I put option, because that's the way the money is flowing, it turns green. Usually, if the stocks are up, call options are green and put options are red. But now that the market is flip-flop, the best thing for you to do is invest in put options. I mean, put options only. Now, of course, you can invest in the individual stocks, which those stocks will be on discount. And so that's a good time to get into individual stocks. But as far as making money day to day, week to week, month to month, put options are the way to go. Now, currently the expiration date is at May 20th. I'm looking at May 10th. This will be a high risk, very volatile options of any sort, in my opinion, when it comes to this. So I'm gonna look at different expiration dates first. So I can go out about a June, and just because the way the market is moving, I think this is what I'm going to work on. And now, because this particular option has been known historically in the trending analysis of it decreasing in price, if you notice, the put options are very expensive. They're very, very expensive. Now, ladies and gentlemen, if you have any questions, put them in the chat. But nonetheless, a lot of these options are very expensive. Let me show you. So currently the stock price is at 2.43. Now, if I go below this price of 2.43, let me just put a plus sign here. It kind of gives me a trajectory of where the stock is going to be. In order for me to have max profit, you notice that the stock has to decline at a certain point. And just as the strike price and the premium price, it has to move in beside these two ratios in order for you to make any money. Now, this is just projected, okay? And as Robinhood has here, it says expected profit and loss. And you can kind of play with this line to see when you essentially make profit, okay? You can kind of play with this. But if this stock goes up in price, your option will expire out of the money. And what does that mean? You don't make any money. Now, if this stocks continue to decrease, if you notice it's going left instead of right, you have a high potential to make money. Now you see the break-even price, meaning that this stock will have to drop down to $2.20 in order for you to make any money, for you even to break even. So let me go back and let me show you something else. Another key tool to use is this basic trending analysis, right? We're not looking at ROIs, we're not looking at market capitalizations, we're not looking at none of those things. I'm just gonna go a year out. And I'm gonna tell, at the height of this stock back in June of 2021, this stock was up to $13.31. And if we see the trajectory of this stock continue to decline over the course of time, we see right here, it's already been under 220. It rolls up a little bit, but we also see a trend going down. Again, I'm gonna go back to trade options. I'm gonna go back to puts. I'm gonna go all the way out to June, because as I can tell, this is one of those options I'm gonna have to watch steadily. But nonetheless, I'm gonna go down to, if you notice, it won't let me invest in any option that's below $2.43. So with that being said, this stock is a trap. This is the option trap. I don't know if you guys ever heard of an option trap, because this is something that I've been looking at for a very long time, where they don't allow you to invest at a lower strike price. That way your stock can never reach its premium to order to start making money, okay? Because that's when you really want to sell options. So now I'm gonna go through my portfolio one more time, because I want to find an option. I want to find a stock that I can invest at a lower price point that it's already at, okay? So bear with me. Let me try out skills very quickly. How much is this stock? $1.90. We may run into the same problem here. I think I will probably see, again, everything is on a decline. Let me just check. This is how the market really traps people if you don't know what you're doing, okay? See right here. Here we go. Okay, good. We had this stock at $1.90, and we do have some, but I'm gonna reach this out a little bit. I'm gonna go out to June 3rd. Let's look at it again. Okay, so I can potentially buy this stock at $1, okay? And we're looking at $1.90. I'm gonna go the highest at $1.50. So again, let me show you what I'm referring to here. Now, break even is $1.40. So essentially my strike price is $1.50. When this stock started to the expected profit and loss, so this is not true to form, this is not 100%. But as this stock starts to reach $1.50, I start becoming breaking even, I start becoming in the money. And that is very important. So what I'm going to do here, I'm actually going to buy a couple of options here. They shouldn't be that much. If you notice, there's around $9, okay? But I want to, let me see, I want to do probably around 4, okay? Because I'm going to be watching these very quickly. I'm going to go off camera right here. I want you guys to see all my business. There's a lot of fraudulent things going on in the world here. Bear with me, family. Let's put a little money in here. Oh yeah, there we go. Got the instant deposit going here. So now I can come back over here, review my order, and submit. Oh wow, hold on. They're going all in with these extra authentication, and just bear with me, family. I have to use my authenticating app. Wow. Robinhood, here we go. 016. All right. All right, we're looking good. And done. All right. So that's about it for me. Mine, if you notice, my buying power went down to $14.64. You can always check your messages. It should actually pop in about this option. Let me go back to my portfolio to see if they put it on my options list. And there you have it right here. Skills option. I'm essentially investing that this stock will decrease in price. Currently, this stock is at $1.90. I'm investing that this stock is going to go to $1.50. So I'm going to be watching this stock here for the next month. I'm going to have to watch it probably about at least 3 times a day, okay? Unless the market is really moving, I kind of want to keep my eye on it, because at any given moment, I want to exercise these options. Not buying the options. I just want to make money off these options. That's another video for another day as far as exercising the option to rank in those 100 shares per option that you guys are investing in. But for this is actually to make some money, because again, as I'm looking at my portfolio, all of these, as you can tell, family, are call options. Now, the one that is most concerning is my call option that's going to expire on May 20th. I got 1, 2 that's going to expire on May 20th. Just looking out at, again, the trajectory of these 2 call options, I believe they're going to expire out of the money, okay? They're going to expire out of the money. And then what occurs is when the market sees that your options are not going to make any money, you know what they do? They don't allow you to exercise the option to buy these stock at the stock price, because they say, hey, you're not going to make any money off these shares of stocks. So why do you want to buy these 100 shares? And they don't allow you, okay? Let me just give you an example since I'm live here. Let me just give you an example. Let's take, for instance, LX. I'm going to my option here. View all options. Give me 1 second. Let me go back. I'm doing this live, so usually, oh, here we go. Exercise this option. There we go. And it says exercise your option contracts to buy the underlying stock or ETF at the strike price. Okay. Continue. Why do you want to exercise this option? It says covering it early in assignment, not enough liquidity, or spread is too wide. Buying stocks. I want to buy the underlying stock. It really don't matter what option you really pick here. They're going to do all the math and let you know you can't buy the stock. I'll be surprised if I can buy it. I am. It says, should you still exercise? In these cases, you might want to sell or hold your contracts instead of exercising them. Well, if I sell my contract, right? Now I was kind of mixing up the terminologies. Exercise means that you actually want to buy the shares of self, and sell means you just want to sell the option and reap any profits or loss. So in this time, if you notice, I'm out of the money on this particular call option, but they're telling me, hey, you might want to think about selling this or exercising the actual contract. Well, if I sell it, family, I'm losing all of my money that I actually invested inside of this. Then they say, well, you can just hold on to it, and then what's going to happen here on the 20th is going to expire out of the money, okay? So it says here, contract is out of the money. They're telling me about this particular contract. It says the contract is out of the money. Eccentric time value is high. It's too expensive. When you exercise a call contract, you have to buy 100 underlying shares at the strike price. Because they're saying, hey, why would you do this? This makes no financial sense. Well, in the long term, it actually does, because instead of losing all my money, I can actually use some of that money in order to buy these shares. But then again, they look at it like you are manipulating the shares when you're trying to buy them out of the money. Like, there's no financial reason for you to exercise this option to buy the shares when essentially your contract is down. Your best bet is to sell the contract or to hold on to it. But again, family, I told you, selling this contract, I'm already out of the money. Either way, I'm not making any money on this, right? Let me continue. Your contract is out of the money. Well, no shit. This is what I know. And this is what I was saying before. They're giving you the difference between the share price and the strike price. They say, wait a minute, the share price is $2.43, and you bought this at $17.50. It says customers typically hold or sell an option if it's out of the money, which means the price of the underlying stock is on the wrong side of the strike price, meaning this makes no sense at all. Continue. And it says here, exercise, $17 off call. This is how much is available. How many do you want to essentially buy? I'm going to put one. It's going to cost me $17.50, right? I'm going to review it. Not enough buying power. So I'm not going to go any further, but the point of this, family, is that they will not allow me to exercise this option here, okay? So when it comes to the current market today, your best investment by far are put options only, with the exception of buying these other stocks on discount. And the reason why I say that is because this is a perfect time for you to go into your stock portfolio. And I'm just going to kind of give you one more view here. Let me show you what has been happening in the past 3 months in the stock market, right? So around April 4th, my portfolio was almost up to $35,000. Look at it now. It is down $10,000, family. That's the power of the stock market. Within a matter of months, you can absolutely lose $10,000. I mean, you can lose, of course, more than that, depending on how large your portfolio is. And then for the year, I'm gonna go to the pinnacle here. I was up at $45,000. I'm almost, I am $20,000 down for the entire year. Because again, I told you, we are in a mini recession, regardless of what people think. We are in a mini recession. So family, there you have it. Put options only. That's possibly the only way that people are making money here today, are put options. They are banking on the stock market losing value and stocks losing the amount of investments and value that has already occurred over the past 2 or 3 years. So this is Financial Literacy 101. Learn money and be inspired. You guys have a great and wonderful Monday. And when you are investing, think put, don't think call. I'm out.